welcome back. Just finished Monday's session and I didn't do a video on Friday. And we're going to have a chat. I'm going to have a chat about what went wrong on Friday, what lessons I've learned from the first week of 2026 trading, and where I need to improve, and ultimately what things are hindering my performances in the market. Because up to Friday last week, we were up about £256 on the week. And then on Friday, after saying that I wasn't going to trade Friday, I traded 3 times and ended the week in minus £84.95 loss. So in total on the day, I was down £341.91 across 3 trades, split between the Nasdaq and the S&P. And we're just going to get into that pretty much. Like today, in fact, before we do that, we'll just have a quick look at today. I had a scan, the 15-minute 8 a.m. break and retest didn't really play out very much on either Nasdaq or the S&P. As you can see, it's not really a break. Price just sort of respects all of this. But I suppose that the giveaway would be the SMT being here. So the S&P was a bit more bullish. No, the Nasdaq was a bit more bullish. So just move that out of the way. And the S&P actually swept this low from Friday, as you can see that. So that would be an indicator that Nasdaq is more bullish. As you can see again, same from 8 o'clock. Price just sort of stays within this range, breaks down and expands upwards. And yeah, there's not really much room for entry there. I don't think I would have caught that even if I was trading today, nor this. And on the higher time frame, we can see that we are just pushing up to clear this imbalance, fill this imbalance, and take these highs. So that was today. There was also a lot of news around, Department of Justice and the federal indictment or federal investigation or something on Jerome Powell. So there's a lot of uncertainty at the moment with the Fed and, independence between the US government and the Fed. So yeah, another reason to stay out of markets. And also because of my losses on Friday, I didn't journal them just yet, and I'm doing that now. And that is one thing that I am sticking to, is if I haven't journaled the trade, I can't take another trade. It's as simple as that. If I haven't journaled the trading day, I'm not taking any more until it's down, because it's just simple discipline. Keep it in check. You know what I mean? Right then. So in terms of Friday, we're gonna have a look at the news. January 9th. As you can see, we had non-farm employment change, unemployment rates, and consumer sentiment. So very, very high impact red folder news day. Earlier in that week, I said I wasn't going to trade Friday, and lo and behold, I ended up trading. So just not great on my part there, to be honest. The amount of times I've been reminded and I've learnt the lesson not to trade red folder Fridays, just because the uncertainty in the market and the probability that price is going to go your way clean, it either completely moves in one direction, or you get a lot of chop, and it just makes it so difficult to predict the timings where your trade entries are valid, pretty much. So on the day, I did actually follow my model, but I just traded too many times chasing the same setup, and there was a lot of uncertainty within the model at the time. So my first trade was on the S&P. So we'll go into there first. And straight away you can see relative equal lows in the London session, and we also had this Asia low here. So my target was to go short and take these London lows going into it. So from 8 a.m. we drew out this candle and we're looking for a reaction off that, and then if we drop down into the 1 minute, actually just skip right across back here. It's going to be a lot of going back and forth because I'm going to have to switch every time I change time frames. But basically, price moved up and traded into this fair value gap. For reference, that is here. Well, I traded above that, and then this is going to do my head in. Right, I should have done this on Friday. Another point to note was I was working from home, so I was just on my laptop at my desk most of the day, so really not great. But in hindsight, going against the model here, broke out upwards, and typically the direction that price breaks with this model is the direction that you want to be targeting. So straight away upon review here, it's not fully in line with the model, but I had reason for price to come down and take the London lows because they were equal lows. And we'll get into NASDAQ afterwards. Jeez, where the fuck are we here? Way too zoomed in. Again, that's today, fuck's sake. Sip that across. Right, so we had this break below. I got in at the midpoint, 9:30. I watched this candle close, and then pretty much once I was in, the London low was swept on the NASDAQ at 9:32. And because of that, price didn't need to come down on the S&P, and unfortunately I was already in the trade and I was just on the wrong market, and as a result of the NASDAQ taking the London low at that time, price then came up, and then a lot of chop around here, and I was just so uncertain because of how it was moving. Like, you can see these massive wicks, big ranges in the 1 minute candles, and when you're looking at the 15 minute, you can see it here as well. It's just very much a lot of chop. So on the NASDAQ, this would have been hit perfect. So after we got stopped out on that first S&P trade, I was looking at NASDAQ, maybe retrace and then target the Asia low. So this was my initial idea here. So we had this high swept right before the New York Open, and this is why I was bearish. It just made sense. We swept this high, and the next draw on liquidity was down at the London low. And the reason I went for the S&P over the NASDAQ is because we had relative equal lows on the S&P, whereas on the NASDAQ, you can see they're not quite as equal. So what do we get? We get the break up, and then closer to the session, we have that push down. Literally, I think, just gone back to Monday today. My goodness, this is a nightmare doing this. Right, so what I should have done was go short here on this tap into the midpoint after the breakdown. But I was uncertain because the Nasdaq had already taken the London low at that point. So I was thinking, all right, are we going to go up now? And pretty much you can just sort of see what was going wrong here. It was like I was just in at the wrong time and getting carried away. And yeah, the first S&P trade was minus £134 for minus 60 pips, and the first Nasdaq trade was minus £133 for 448 pips. And yeah, pretty much I just ended up chasing, which I shouldn't do. It was because I'd seen, it was partially because, when you're in the moment, it's very easy to get drawn into what you're looking at and thinking that there's more opportunities than there is. And also, I'm going to put partial influence. I'm not saying this is not the fault of the video that I saw of someone placing 2 trades and then winning back on the second trade, using this model. And yeah, ultimately I'm taking full responsibility of this. It's just given me I've taken a couple of days out just to really reflect on this, and the amount of times I've said it on this channel where my maximum trades per day is 2 and I've done 3, and that's where I lose, and typically it happens on Fridays. So this is something that I really am taking note of now, because it's a recurring pattern, take more than 2 trades on a Friday, lose all 3, and then you're down. I've just ruined a really good week. I was up 256 pounds on the week to end it minus 84. It's just like, yeah, you can make a little bit more on a Friday, but the probability is just so much lower. It is just so much lower. And yeah, going forward, I am implementing this for certain now. No trading on Fridays, or if I do trade, it is 1 trade max. All right. This is my note to myself: 1 trade max on a Friday if a model plays out. And if it doesn't, then fuck off, close the charts and just leave it. All right. Keep it simple. Now, with these trades that I did take on the Nasdaq, it is quite unfortunate because, as you can see, with the chop going on here on the 1 minute, it was very, very slightly stopped on each one, and then we got the move down to the Asia. This is the Asia low here where the TPs were. This is the London low here. So if the stop had just been, what, I don't know, maybe to account for spread, couple points higher, so what is it there, 51, if it had been 54, we would have won that. Do you know what I mean? 3.7 to 1. Granted, this was a smaller trade and the stop was £74 on this one. So on my third trade, I did size down a bit, and this was what it looked like roughly. It's a little bit different to my broker statement just because of spreads. But yeah, even still, it's like you're risking a third trade to break even on the day, when you could just walk away after the first trade, being like 130 quid down and still in profit for the week. So yeah, I mean, it's one of those. I'm taking full responsibility of it. It's my capital. It's live capital. And I have made this mistake and set the same rule so many times. But now, is it going to be different? I guess I'm going to have to hold myself accountable to make sure that it is different next time. So on a Friday, no trades / 1 trade max. So that is pretty much the rule, just 1 trade max. I think I'll do that. 1 trade max if no red folder, and no trades if red folder. In fact, I'm going to add that into my notes here. One trade max on Friday if no red folder, no trades if red folder. Okay, so this is just results from my back testing in previous videos. And yeah, it's just one of those. It's like little mistakes that I constantly make within my psychology that are impacting my P&L curve, you know? So yeah, it is one of those. Like I was looking at different times. I was skipping between the 3 minute, the 5 minute, the 1 minute, and between both charts on the day. And ultimately I was just confusing myself. Like we had this inverse fair value gap a little bit higher up, which after 10 a.m., you know, we finally see the sweep of the London low just, and then the reversal to go up and take these bullish liquidity zones. And yeah, price come up since then, and today we've sort of sold off during the start and then seen a big push during the AM session. So yeah, it's one of those. If we look at the higher time frame, it's not wrong to want to see these taken. Like I wasn't completely wrong, because price did go there at one point to those lows. You know, with the structure that was there at the time, you can imagine this has just been taken. You're gonna expect to see a bearish reaction off that to the next draw on liquidity. Not, doesn't need to be all the way, but the London low was my first target, and unfortunately I was in the wrong market when I placed the trade due to the difference in the lows, and that cost me. I ended up just chasing back my losses, and you know, it's a very typical behavior to do, especially when you lose live capital. But again, important to stress, like, live to trade another day. If you get it wrong, just step away. You don't have to make it back on that day. All right? Don't have to make the money back on that day. You can always come back next week. You can always come back in the following day or in the next session, you know? Don't need to go straight back in, you know, 5 minutes after a loss. Because the main thing is your perception of risk goes out the window psychology wise, and you just start taking random trades, as you've seen here, as I've seen. And yeah, although I suppose the positives to take away from this are, you know, after 2 big losses, I reduced risk, not to the point where I didn't trade, which is what I should have done. I should have stopped after 2. Should have stopped after 1, really, which is what we're implementing going forward. And this is the whole point, like, we're learning. And I think it's important to learn this at the start of the year. You know, we still got another 51 weeks left in the year to trade. So it's not the end of the world. It's not the end of the world, but it is a bit of a bummer to go from such a good week to then ending it in the red, purely being my fault. You know, it's just like, and I'm not going to lie, I was frustrated afterwards. Not in the fact that I'd lost money, I was frustrated with myself, because it's something that I've learned so many times on Fridays, where, you know, it's just like so easy to get caught up in it. And also because I said I wasn't going to trade, and I did. So it's like, come on, mate, switch on. So again, reiterating, 1 trade max when there's no red folder on Fridays, no trades with red folder on Fridays. That's what I'm implementing going forward. In terms of my trades for the week, just pop that up there. Let's hold that straight. So you can see the week started off well, 103.79 and 100, and then just a little mini loss, chasing that upwards move on the Thursday in the PM session, to then, you know, three big losses on to the Friday, which just didn't need to be done. So yeah, that is my chat, psychology with myself. I'm sure other viewers have also experienced this, and it is natural. It's part of it. Like sometimes you just do have to learn the same lesson over and over, and sometimes you have to learn one lesson a little bit more than others, for it to really sink in. So that's me there. We put it behind us, come back stronger this week. And I think as well, what I'm going to do going forward is I'm going to set myself a max win percentage, because I realized when I'm on like a winning streak, it's like you want to stop for the week or the month, but it's like, how do you know when to stop? You know, how do you know when to step back and just let it be and just keep your profits? Let's take that out. So I want to set myself maybe max win of 4% for the month. I think that's fair, or even 4% for half a month. So a max win of 8% on a month. But it's like, even saying that is like, if you got 8% in a month, that's brilliant results. Do you know what I mean? If you even got like 3% in a month, that's great. It's because it's the lower capital, you sort of get sucked into wanting to trade and attack the market all the time. So yeah, 4%. What I'll do is 4% max win, and then max loss 3-4% as well. So I guess maybe 5% max win. Then it's at least consistent. And then that gives at least gives me an indicator on when to step away. Like I had 3 winning trades in a row. That should surely be enough to be like, right, I'm good for the next 2 weeks. I don't need to trade. It's just easy. I wanna stay consistent with this, especially going into 2026. You know, I want to prove to myself that I can, after 1 year being in the markets, ending it red and just surviving and not destroying the account, to now ending this year in the green. If I can end this year in the green, brilliant. That's my only target this year, just end it green. So, in order to do so, I need to ensure that my risk management and my psychology is in check. And then from that, if I can end this year in the green, I will then look at, funded accounts, scaling capital, to really push it forward into 2027. And we're only at the start of 2026. Like, we've got a whole year of learning and trading to do. So I really am looking at this at like a higher time frame scope. I don't want to rush into it. Like, I've been doing this long enough now to really start to get the gist of what I need to be doing right. I've made enough mistakes, and there will be more mistakes to come down the road, no doubt, obviously. But now is where I really want to start refining this to the point where I am comfortable trading, funded capital, and just larger position sizes as a result of that. So, yeah, quite a lot to take away. I know it's not really much. I haven't really touched too much on today's trades, on today's market movements even. I didn't take any trades today, as I said. Haven't journaled these ones, so I'm not allowing myself to take a trade today. And yeah, it's just something to implement going forward to ensure that, you know, we're gradually tightening up the screws within this model and within this strategy to ensure that everything goes to plan, everything runs smoothly. But yeah, the main thing is I got sucked into the markets on the Friday because I was working from home. I was sat at this desk all day, and you know, I was like, it's a little bit boring. It's a little bit boring when you're just sat in your room all day, and it's like, well, what can we do? Well, we can put some trades on and make time go a little bit quicker, or you know, it's just identifying that and improving. So this has been a bit of a not so much of like a downer session, but it's like more of a takeaway session because it had to be done and it's transparent, you know. I want to keep this transparent and I will keep it transparent. And to help me detach from my results as well, because, you know, my initial thoughts when I left that session on Friday was, oh, fuck, I'm going to have to post a video where I have to explain how I turned my green week into a red week on the last day of the week after saying I wasn't going to trade that day. And ultimately, it shouldn't even be about that. It shouldn't even be about that because this is my trading journal. It just so happens that I do it on my YouTube channel. But yeah, with that being said, let's check out the news going into the rest of the week. So we've got CPI tomorrow, and then PPI on Wednesday. We also have unemployment claims on Thursday, and no red folder on Friday. There is also a lot of geopolitical tension at the moment. You know, all this stuff with Venezuela and Greenland. So keeping that in mind, it may be worth reducing position size. But I need to determine whether that's the right approach or if, you know, I want to start positioning myself in my personal portfolio for any potential crashes. I've already trimmed some of my running positions in that portfolio, so I have more free cash available to deploy when prices drop, if prices drop, which, you know, a lot of indicators are pointing to that happening in the near future. When that happens, it's not completely certain it could happen overnight. So yeah, just remaining cautious in that sense. But before I end this is the amount of pips I lost on the day. 757 pips. Obviously it's different for this one as it was on the S&P compared to these two on the NASDAQ. So this, if it was on the NASDAQ, would have been 600 points. So it sounds a lot more when you put it like that, but 757, something to take away. And I think as a whole, I will improve from this, which is another silver lining. You know, I will improve from this and I won't make that mistake again, hopefully for a good amount of time, at least a good few months. But I have that in place, as you've seen, have that in place. On my plan here. And yeah, I think that's my my chat over, and we'll be back tomorrow with the market moves, whether we took any trades, and yeah, onwards. Trade safe, trade smart, and trade your plan. Make it make sense. You know what I mean?